So I ask that as we go through this, if you do have any questions, please put it in the chat. We will try to answer any questions you may have as I go through the slides at the end. I do ask that everybody remain on mute so that we can get through this. It is a bit of detailed, and I want you all to get as much information as possible. So I know that the holidays are here, right? Who wants to think about taxes? But as soon as the holidays are done, Uncle Sam and tax season is right around the corner, knocking at our doors. So I just want to provide everyone on this call this evening with some information of changes that have occurred for the upcoming tax season, some possible tips and tricks that you may not have thought of, and some information that could potentially save you some money or increase your refund this upcoming tax season. So let's start with income. There are different types of income. And what I have noticed in my professional experience over the years is that a lot of my clients have multiple streams of income, right? Gone are the days where you just have a simple one W-2 because you've been at the job for 20, 30 years. Now you may have a W-2. Now you may have Social Security, depending on what stage in life you are. Maybe some of you like to go to the casino or play the lottery. You know, mega balls have been in the millions. So you may have some winnings from that. The best thing to do, because so much happens throughout the year, is to really take some time to make a list of the type of income that you have received throughout the year. I get a lot of clients who come to me and their taxes have been prepared. I prepared them. And maybe a month later, they get a new document in the mail and they're like, oh my gosh, Imada, I forgot that this happened this year. Or, oh my goodness, I didn't even think that they were going to send me a document. So these are just some ideas of the types of incomes, the types of documents that you will be receiving come the first or second week of January. What's also great is a lot of people have online portals now where you can download your documents. So you don't have to necessarily wait for everything to come in the mail. If you have an account online with your employer, with New York Department of Labor, if you got unemployment, if you're a Social Security recipient or your retirement benefits, you can log onto their portals and download your tax documents. A lot of the times you may not get it in the mail because they want you to go and use their online portal for ease. So these are some of the changes for the upcoming 2025 tax year, your standard deduction. Now, everyone gets a standard deduction. So for single individuals, the deduction this year is $15,750. What does that mean? Because I know a lot of people throw around the word standard deduction without really explaining it. That first $15,750 of your total income, your W-2, your retirement, your business income, your Social Security, everything that you have, that first 15,750 is not taxed. So that's automatically bringing down your taxable income. So these numbers are normally already installed in your tax preparer or your CPA software, but it's just a good rule of thumb to ask them to make sure that you're getting the right standard deduction because things are changing. If you're married filing jointly, you get 31,500 together. If you're head of household, and in order to be head of household and qualify for this 23,625, you have to have a dependent. If you're over the age of 65 or were diagnosed legally blind, you get an additional $2,000 in your standard deduction. Other types of itemized deductions and things that you can write off for your personal taxes, your mortgage interest. If you own a home, if you own a condo, this is one thing a lot of my clients tend to forget is their mortgage interest statement. That helps reduce your taxes considerably. Do you pay real estate property taxes? That can also be written off. If you are part of a church or a charitable organization and you have made contributions to them throughout the year, all those donations can be included on your tax return as a deduction. If you've had a lot of medical expenses throughout the year, and I mean glasses, dental work, if you've had medications, surgeries, or anything like that, you want to compile all of the medical expenses, all of your co-payments, all of your visits together to see if that will be able to help you get a deduction on your medical expenses. And if you have dependents, you can include their medical expenses in your tax return as well. Tax credits. These are some things for everyone to look out for. Your earned income credit, your child tax credit if you have a dependent, anyone under the age of 17, dependent care tax credit. A lot of people tend to miss and forget this one. If you're paying for after school programs, if you're paying for tutors, if you're paying for, a babysitter, someone to pick up your child and watch them for you, transportation, this is a possible credit that you may be eligible for. Tuition and college credits. If you have a dependent who is in college, if yourself is in college, whether you're part-time or full-time, you can possibly receive a deduction as well. And a lot of times the university or the college will mail you out a 1098-T form. If they do not, because I've had this happen to a lot of my clients and their children, you can tell the dependent to go onto their Blackboard site of their school and download that form if they've made any payments towards their tuition. If you are out of school or your dependent is out of school and you're paying student loan interest, you can claim up to $2,500 annually of the student loan interest that you are paying. If you are an educator, I know that a lot of Adeta's clients are in the teaching field. You can claim up to $300 off of expenses and supplies that you've had for your profession. So if you've had to buy supplies for your classroom throughout the year, you can claim up to $300 off of that. Adoption credit. If you have went through the adoption process, this includes travel, lodging, application and filing fees. You can claim up to $17,280 for an adoption credit. So let's just kind of go through the earned income credit because this is the most popular one that a lot of people really look for. So earned income credit starts to phase out, or meaning you won't qualify if your income is above these ranges. So if you have no children, you're single, no dependents, you can make up to $19,104 and still be able to qualify for some part of the credit. If you make $19,105, you will not qualify for earned income credit. $1 makes a big difference. The good thing about this is that this year for 2025, all of these incomes guidelines have gone up. So they are making it possible for more people to qualify for the earned income credit than who would have previously. If you have one dependent, you can make up to $50,434 if you're single. Married filing jointly, as you can see, the income caps are a little bit higher, but they are making it possible for more people to benefit. The child tax credit, which is also a very popular one, it is up to $2,200 per child under age 17. And I mean, if they turn 17 in 2025, you will not be eligible for that credit. It's very specific by the birthday. And up to 1,700 of that is refundable. It will actually be a part of your tax refund. The tuition and college credit, as I mentioned, if you are an undergrad or if your dependent is undergrad, they will qualify for the first one, the American Opportunity Credit, which is up to $2,500 in expenses, tuition, books, lodging, computer, whatever resources that had to be bought for the child or for yourself to attend college, get work done, and be productive, you can claim up to 2,500. If you have completed the first 4 years of college and now you're a grad student or you're taking maybe you're doing your master's, you can then apply for the lifetime learning credit, which is up to 2,000 per tax return, not per person, but it's per tax return. So if you and your spouse both were in school and you're married filing jointly on the tax return, you will only receive the $2,000 for that tax return. It won't be 2,000 per person on that tax return. And there are some income guidelines. It's up to 80,000 if you're single, 90,000 if you're head of household, and then married filing jointly, it's around 180, where those credits will start to phase out and you may not qualify. So let's jump into some business tax basics because I know that a lot of people who are joining the call may have a business, whether it's an LLC or an S Corp, or I know that some people were thinking about starting a business, and that's why we joined this evening. So let's get into it. These are the typical types of business entities that you would find. The most common one is the first one, which is an LLC, a limited liability corporation. A lot of people also have S Corps, which is a step above. It's a little bit more segregated from your personal. It's more of a standalone business. And then you will have a corporation, which is a full entity running by itself, completely separate from your personal finances. And a corporation usually has stakeholders, it may have a board. A corporation is definitely a lot more intricate, so a lot of people tend to go for an LLC or an S Corp. So, how to register a business. If you currently don't have one, the first thing you want to do is search the name that you want to call your company. And for New York City, which most of us are located in New York, you can just go on the New York State Department of Corporations and do a name availability search to see if your company name is available. No two companies in the state of New York can have the same exact name. So if you put it in there and it's already taken, you will not be able to register your business. Once your name is available on the same website, the New York State Department of Corporations website, you can then begin to register the business. You'll receive your articles of organization if you're doing an LLC, or you'll receive your articles of incorporation if you're doing an S Corp, or if you're doing a corporation. If you're registering a partnership, and I know a lot of people have that, most times, often than not, you would register it as an LLC. You can also apply for your EIN number. You would do that on the IRS website, irs.gov. All business entities should have an EIN number. You would take that as the social security number, quote unquote, for the business, right? In New York State, it is required that you have a certificate of publication, meaning that you have to submit to a newspaper for at least 6 consecutive weeks the name of your company and that it was registered to ensure that no other company in the state of New York has the same name. And one important thing that a lot of people do tend to forget is that you should have an operating agreement. Even if you are a single member LLC, meaning that it's just yourself and you have an LLC now, you should still create an operating agreement between you and that business, meaning what is your role in that business? Meaning if you are infusing startup capital into the business, how is the business going to pay you back? You know, there are different terms and things that can be put into the operating agreement, and it's very important to have one. And normally, when you go to open up a business bank account, these are the things that they'll be asking you for. They'll ask you for your articles of organization, they'll ask you for your EIN, and they will ask you for an operating agreement most times. So why do most people start businesses, right? Additional income, maybe you've had a side hustle, maybe you've been cooking and people tell you your food is so great, so now you decide to start selling it. Maybe you've done hair and you do hair so well, so now you want to start charging people for your services. Additional income, especially living in New York, is probably mandatory now. It's not even a luxury anymore. Also, the flexibility, right, of having your own business, making your own hours, spending time with your family as opposed to being restricted to a 9 to 5 workday. Financial freedom can come from having a business, especially if the business is doing very well. There's no cap on the potential that you can make with your business as opposed to working for a company when you have a salary. Creating generational wealth, passing down that business to your dependents or someone in your family or a friend can definitely increase the value of the family. And there are definitely certain tax advantages that you do get with having a business as opposed to just being a regular W-2 employee. So here are some of the business deductions that I definitely like to go over, and I'll spend a little time here because people definitely forget a lot of these things. And I know when you have a business, you're running it day in, day out, you're focused on the operation. But a lot of people, especially even my clients, they forget all the things that they do throughout the year, all the areas, the avenues that the money has been spent, right? But these things are very important because it brings down your tax liability. It brings down the amount of money that you're going to owe Uncle Sam, and in turn, you keep to save more in your pocket. So if you haven't registered your business yet, you still have until December 31st to do so, and you can write off those registration and incorporation fees. If you are using a home office, a portion of your home to run the business, you can definitely deduct a portion of your rent or your mortgage. You can deduct a portion of your property taxes, light, gas, internet, telephone. These are things, common everyday things that a lot of people forget that they can actually write off. You have to make phone calls to clients, you have to make phone calls to vendors. So you can definitely write off your telephone expenses. If you have to pay relicensure fees, me being a tax professional, every year I do have to take courses. I can pay for that. That's a business deduction. I have to be registered and licensed with the state of New York, so I have to pay for that. All of those are business expenses that I can write off. If you're a plumber, if you're an electrician, and you have to take courses to keep your license active, if you have to pay to keep your license active, these are things that you can write off as a business deduction. If you have to get business insurance, again, in my profession, I have to get E&O insurance. So that is an expense. If for your line of business, you have to have any type of insurance to cover you as well as your clientele, you can write that off as a business expense. Marketing and advertising, business cards, social media platforms, flyers. If you're doing ads on TikTok, if you're doing ads on Instagram, on Facebook, if you're paying to boost these ads, if you're paying someone to do t-shirts and uniforms and different things for your company, again, these are all business expenses that you can deduct. If you have to travel for conferences and seminars, hotel, lodging, even the food for those conferences and seminars can be written off as a business expense. If you're required to maintain subscription services, to stay up to date on whatever your trade is, whatever your industry is, those can also be deducted. Payment software. If you're using, let's say, QuickBooks or Waze or Expensify, these different platforms, one, to track your business expenses, two, to pay employees, ADP, paychecks, all of these processing fees and payment software platform fees can be written off. If you guys have to use a CRM system to keep track of your clients, to keep track of your day-to-day business activities, or even your staff and employees, those system fees can be deducted as well. Now, car and financing. This is definitely a little tricky, especially if you don't have a dedicated vehicle solely for your business. But if you are using your personal vehicle for your business, there is a way that the insurance, the mileage, the gas, the tolls, and parking fees can be deducted as well. So don't get discouraged if you don't have a dedicated vehicle for the business. You can still use your personal vehicle. It's just a little bit more strategic in how your tax preparer would gather the information from you so you can receive those deductions. Tracking business expenses. This is very important. Like I mentioned earlier, I know that we're busy operating the business day in and day out. But why do we need to track our business expenses? One, so that we don't forget what we're spending our money on to keep the business running and afloat. You want cleaner bookkeeping so that you can have better and more deductions. You want to keep your business transactions separate from your personal bank account. And that I cannot emphasize enough. Having a dedicated business bank account is paramount in having clean and compliant business expenses and tracking processes. It'll make your life a lot easier as well as your tax professional's life a little bit easier. And it's more compliant in how you would run an actual and practical business. And if you're a little bit old school, and don't like the QuickBooks and the Ways and the apps and all of that type of stuff, having a dedicated ledger or notebook can work just as well, as long as you have the categories, the transactions listed, and the amounts. We could also use that to make sure that your business expenses are being tracked properly. So this is a good one, hiring your child or grandchild for your business. I've definitely had a few clients reach out to me because they've seen this, whether it be on Instagram or TikTok, different videos people have been posting about how you can hire your child and, it's a tax write-off and X, Y, and Z. So you can hire a dependent child, grandchild. Now, they have to be a decent age to perform some sort of work for your business, right? You can't hire a 2-year-old and say that they're filing, you know? I mean, maybe the 2-year-old could like sweep a little bit, push the little mop or broom around for you, but that probably last maybe about 5 minutes, if that much. So you want to make sure that the child is of a decent age. I would normally say anywhere around 8 to 10 years old, where you know that you can give them some sort of direction and they can actually help you in the business. So whether it is helping you clean, whether it is helping you do filing, postage, some sort of type of light work is definitely acceptable. You can pay the child up to $15,000 without them worrying about paying federal income tax. So literally, you can pay them $15,000 and they don't have to worry about Uncle Sam coming and knocking on their door. And one of the reasons for that, like I had mentioned in the previous slide, is because of that standard deduction. So that money is not being taxed. The caveat to this is that you cannot pay them in cash. You can't pay them in a check just to give them free money, quote unquote, off the books money. They would have to be issued a W-2. That is the only way that you can write this off as an actual deductible business expense. And paying them that $15,000 now becomes a write-off for the business. If you don't want to, quote unquote, give the child the money directly, I have definitely advised clients that they can pay that $15,000 into an IUL for the kid, or they can pay it into a custodial IRA account for the kid, so that the money isn't going into their hands directly, but it is going into a financial tool to save for the child, and it will be earning interest and it will be protected for the child. Hidden tax credits that some businesses definitely do not take advantage of. The first one, QBI, is qualified business income tax deduction, meaning that 20% of your business income can be deducted. Now, this is very important for LLC owners because if you are an LLC owner, you may realize that on your personal tax return, you're still filing for your LLC in conjunction on that tax return. So what this does, it allows you, once you finish do all of your deductions, your expenses and everything, whatever is your final total income for the business, 20% of that can still be deducted as a credit so that you're not being taxed on the entire amount of the income that you have received from the business. Startup retirement plan credits. If you have employees, if you're a small company, if you have less than 50 employees and you're starting up, let's say maybe a Roth 401k for them, or regular 401k or 403b retirement plan, you can deduct up to $5,000 for putting a retirement plan in place for your employees. You don't have to physically contribute to the retirement plan, but the fact that your company is setting one up for them, you automatically qualify for the credit and deduction. Work opportunity tax credit. This is a great one for small businesses, and this is pretty much the state looking to get people re-engaged in the workforce. So as a business owner, if you're hiring anyone who's considered in desirable tax brackets or desirable stages in life, such as SNAP and food stamp benefits, they're receiving public assistance, if they are qualified veterans, if they are qualified ex-felons or re-entering citizens, your company can get a tax credit for hiring these employees because you're now bettering their financial state and bettering their financial opportunities. So if you've hired anyone in 2025 who may be on food stamps, public assistance, SSI, or anyone in those categories, you can definitely take advantage of this work opportunity tax credit. So creating some tax-free income. Now, a lot of the times your business income, well, if you're a business owner, you may not have a retirement plan, right? Because you don't have a standard 401k or a standard pension from a job. So you have to create your own retirement. You have to create your own future outlook. So one of the ways that you can do that is by opening a Roth IRA. A Roth IRA is a great financial tool because you can save for retirement, and it's also tax-free when you decide to take it out during your retirement years. It's different than a traditional IRA because with a traditional IRA, you will still have to pay taxes when you take out your distributions during retirement. So I'm all about paying less taxes when I'm retired as opposed to still paying taxes when I'm, 65, 70 years old. So I definitely try to steer my clients towards some tax-free options when it comes to retirement planning. So a Roth IRA is definitely a great trade as well as a Roth 401k. And you can do that with companies like Fidelity, Charles Schwab, Vanguard. There are definitely some great companies that you can do the Roth IRAs or Roth 401k with. Another tax-free vehicle would be an IUL, which is a Index Universal Life Insurance Policy. And I'll say that again, Index Universal Life Insurance Policy. And what's great about an IUL is that one, you get life insurance protection and coverage for you as the individual, but then you also get cash value that is growing and being saved inside the IUL. So you can use that money, one, take out a loan and pay off debt, pay business expenses, go on vacation, whatever you want to do. Or you can leave the money in there, let it grow, save, and when it's time for you to retire, you start taking withdrawals and distributions to live off of, which are all tax-free. And the great thing about an IUL is that you don't have to be a minimum age to use it, nor take out the money. Nor with normal tax return, with normal retirement vehicles like your 401k, your pension, your annuity, you have to be at least 59 and a half to start taking money out or you'll get a penalty. But with an IUL, you can be at any age, any stage in life, and you can take out the money that has accrued inside of there without having any tax repercussions or penalties. Another great tool is an HSA, which is a health savings account. So if you are a W-2 employee, your job, your employer might offer an HSA. And what's great about this, if you do know that you have a lot of medical expenses or your dependents may have a lot of medical expenses throughout the year, you can put your pre-tax dollars in here in the HSA account. It will grow, it earns interest depending on who your employer has the account with, and you use that to pay off all of your medical expenses throughout the year. The account, the money that's in the account, you can roll it over year to year so it doesn't disappear. You don't have to use it all up. If you don't use it, you can have it for next year and the year after, and so on and so forth. And the great thing about this as well is that when you turn 65, you can use the money for whatever you want. So before 65, it has to be used directly for medical expenses. But after age 65, if you still have funds in your HSA account, you can use those funds for whatever you want without having any penalties. And it's also a tax deduction. You get credits for having an HSA account on your tax return. The other thing is an FSA account, which is a flexible spending and savings account. This is particularly popular with people who have young children to pay for daycare, to pay for aftercare, school expenses, tutors, things of that nature. It's more so education aligned for you and your dependents to have some sort of childcare while you're working. You also get credit for having an FSA account, but the funds that are in there do have to be used for some type of child care or child improvement services. So let's look at an example. If you're the business owner and you have an IUL, right? You can contribute, let's say, $400 a month. You're saving this because you don't have any type of retirement plan. You don't have anything else saved up for your future years. So you want to know what that would look like. Putting that $400 aside into the IUL, remember, one, you're going to have tax-free growth on your money and your withdrawals. The reason why your money is growing is that $400 is going to cover you with life insurance, but also a portion of it is being invested in the S&P 500. So your money is going to continuously grow. And there is no bottom line, there is no loss in your money being in an IUL as opposed to it possibly being in an IRA account or your 401ks, which are also invested in the market. The values can go up and down in your IRA or 401ks. I don't know if anyone has looked at theirs recently, but I know quite a few people who have lost a lot of money in their accounts over the recent months because of what the stock market is doing. So this is a safer option because you have no loss and you can earn upwards to 13% inside of your account. It's ideal for fluctuating income, which a lot of business owners have. You know, sometimes we might have a good month, sometimes we might not have a good few months when it comes to being a business owner. So you can definitely gauge and change your premiums a little bit so that you can keep your account active based upon what's happening with you and your finances. And like I mentioned before, that added protection and living benefits that you can withdraw money, that you can use the money for later on in life during retirement is definitely an added bonus. And those are just some other ways that you can use an IUL as a business owner. If you're thinking about succession planning, if you're thinking about estate planning, if you do have, a small company, but you have some key employees and you want to do some sort of plan for them, but you don't want to offer a 401k or an IRA, you can actually open up an IUL for them. And it would be considered an executive bonus plan where you, as the employer, would pay for the IUL monthly and you would have the employee on there as the beneficiary and the owner so that they can use the policy for themselves. Or if you are in a partnership or in a corporation that has multiple stakeholders and business owners, you can also gear this towards a buy-sell agreement, which kind of outlines the way that you want to maneuver the business if someone in the company was to pass away, who would get the policy. It would cover their portion of ownership within the company. It would cover if their relatives were supposed to take over their portion of the company, or if you wanted to buy them out of the company. So there's a lot of different ways on how you can use an IUL to, one, cover yourself, cover your business, as well as save for your future and retirement. So here's my contact information. If anyone needs additional information, who wants to have a consultation, please feel free to reach out to me. As I said, I know it's the holiday time. We don't really want to think about taxes, but it is right around the corner, and I am doing free consultations for the rest of the year. So let's see if we have any questions in the chat really quickly. Gonna stop sharing and see if I can. Okay, so we do have a few questions. As a licensed professional, is it true that I need to apply for a PLLC? So it depends on what type of licensed professional you are. I'm a licensed professional in my industry, I do not need to have a PLLC. But if you are a physical therapist, if you are a psychotherapist, occupational therapist, things along that line, even a lawyer, yes, you do have to have a PLLC. So it depends on what industry you're in, which would determine what type of LLC arrangement you can have. Um, let's see what else we have there. Okay. Are the premiums allowable business expenses? How does the small business owner show the executive bonus for himself? Okay, I believe that's in reference to the IUL. So if you have your business set up as the payer and owner of the policy, then yes, it is an allowable business expense. So when you get with your licensed professional, either Odetta, myself, or whoever you talk to after the call, that IUL has to be strategically set up that the business is paying it for the employee so that, yes, it can be considered an allowable business expense. Okay. So regarding writing off expenses, what is the difference between that and tax credits? Are there any limitations to tax write-offs? Okay, so writing off expenses or deductions is literally the amount that you put in for that line, let's say for marketing and advertising, that's a deduction, that's an expense. It gets minus out of your overall business revenue or income that you're claiming. A tax credit is just a bonus feature that is put into your tax return that helps bring down your taxable income, but does not necessarily give you a refund, if that makes sense. It's helping to bring down your taxable income, but it's not always refundable. So it's not always a part of your refund at the end of the year. So deductions bring down your income. Tax credits help to bring down the taxable income and your adjusted gross income and aren't normally refundable. Some are refundable, like the earned income credit, but only a portion of it's refundable. Just like the child tax credit, only a portion of that is refundable. So there are some caveats. Not everything is refundable or part of your refund. Okay, so for the child, let's say that's 17 or 18 years old, did you say that up to 15,000 is not taxable to them and a write-off for the company? Yes, that's correct. It's actually up to age 21 that you can have a child or dependent hired by your company, and 15,000 is definitely a write-off for the business. It's a business expense because you're paying your employee. So that, yes, that would be a business deduction. All right. One more question in here. Sorry, just skimming through all the questions. Okay. If a business owner has a W-2 employee and offers an IUL instead of the 401k, then the payment is a business deduction. Okay. So if you are paying your employee a W-2 on a W-2 and you want to offer them in addition an IUL as a benefit from the company, again, it's how your professional sets up that IUL policy. The business has to be the payer on that policy for the employee. And yes, it would be considered a business deduction for the company because it is an expense. And for a child, I can pay them via an IUL, correct? For the child, if you're talking about the 15,000, you would pay the child, it would have to be strategically set up, whereas the payments are being used to pay the IUL for the child. So it might have to go into a bank account for them, and then the bank account will then pay the IUL. It's a little bit more strategic for that, but yes, you can definitely do that. And again, it's how we would set it up. Okay, I'm gonna put, I know we have some other stuff Odetta wants to get to, so I'm gonna put my contact info inside the chat, and then please feel free to message me, email me, and we'll get more into the tax stuff. Thank you guys.
Mara, you've done such an amazing job. If you want, you could answer the last one about the QBI.
Okay. Um, More clarity on the QBA. Okay, that's qualified business income deduction. And again, it's 20% of your income, of the business income that can be taken as a deduction, and that's on the state side. So there is a particular form once you go through filling out your entire tax return that will populate that, especially if you have an LLC, that you can put 20% of the qualified business income so that it's not taxable. I hope that clarifies it a little bit more.
That's a very informative presentation, Ms. Hercules. Thank you so much. I learned so much.
You're welcome. And I'm putting my stuff in the chat right now. Adetta, I'll take it over to you.
Awesome. Thank you so very much. Imara, you are amazing. This is why we love you. And for the folks that are in WFG, you guys all have access to Imara. And even if you're not in WFG, you do also have access with Imara. So this information that we're given here is just general. As we always say, contact the person who invited you. And in this case, you definitely do want to make sure that we're all going to have to file taxes, right? Whether you're self-employed or you are an employee. And Imara is a knowledge of wealth, and she's been doing this for a very long time, and she knows her stuff, as you can clearly see. So I just want to share my screen for those of you that are, if you have a business, or even if you don't have a business, as you learn, one of the strategies to minimize your tax, and actually I have a question for you, Mara, because I know the answer, but for folks in the room, I often hear when I sit with clients that are high net worth, they say, well, Odetta, I make a lot of money, and so I'm gonna have the taxes defer, right? I'm putting a lot of money in my 401k, a lot of money in my 403b, a lot of, like, I'm just saving, 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 because it's good to save, right? And so they're putting a lot of money in their current retirement account that they may have with their job. And the idea is, well, I don't want to pay the tax now because I'm making so much money and I'm going to have to pay a lot of taxes now. So let me just keep putting this money aside, because I don't want to pay a lot of taxes now, right?
Mhm.
So what do you say to that?
Well, you don't pay the taxes now, but you're going to pay it later, right?
Hallelujah. Thank you, Jesus. Thank you for saying
And
that.
you don't know how much taxes you're going to be paying later, because if anything we've seen in this country, especially in recent months, is that taxes continuously grow, and go up. So while it sounds good for right now, there are other vehicles and other ways that you can tax advantage your money as opposed to tax defer, where you'll still have to pay taxes when you do decide to take out the money. And I'm a big proponent of having a flexible portfolio. You know, you might have a 401k with your job, but okay, you're going to pay taxes on that. So have something else that you won't be paying taxes on. Don't just be paying taxes out the wazoo everywhere when you decide to take out your money. So you have to be a little bit more flexible with that.
Awesome. And what we also say is if the company is matching, then yes, it definitely makes sense for you to, put money in your 401k, your IRA, your 403b, 457, or whatever your job might be giving you. And I love sharing my own accounts. Right. Can you guys see my screen? Let's see.
Yes.
I don't know what you're seeing. Okay, here. So as you guys may or may not know, I'm self-employed, and even when I was working, I was one of those individuals that was like stacking away a lot of money in my 401k because, hey, that's what I was taught, right? And I love saving money. So saving to me is always been very easy. And so I like saving, and I was saving a lot of money back then. And I'm still saving a lot of money today, but I'm saving that money smart. And I say smart because with the IUL, Index Universal Life, you're saving your money smart. You're in control of your future. Let me ask you guys a question. God forbid, if you were to get ill today with a critical illness, that is cancer, heart attack, or stroke, as you guys can see here, this top slide here, I don't know if you guys can see it big enough, but with my IUL, and by the way, I have 3, so this is just one IUL I'm showing you. It has my name, Odetta King. And if you notice here, it says critical illness rider. What is critical illness rider? Well, that includes heart attack, cancer, stroke, which is sweeping the nation. If you do not know, every 30 to 40 seconds, okay, every 30 to 40 seconds, someone is being diagnosed with heart attack, cancer, and stroke. We are faith-based, we believe in God, but we're also know that we got to put things in place, right? So if something were to happen that you, God forbid, were to get hit with a critical illness, what do you have that's going to pay you hundreds of thousands of dollars, multiple hundreds of thousands of dollars, right? And this is why we see a lot of GoFundMe, right? So you want to put yourself in a position to save your money smart, leverage a strategy like an IUL, which is tax-free, but also gives you that peace of mind, okay? Which is priceless. Peace of mind that God forbid, whatever happens in the future health-wise, at least I know this vehicle is going to pay me out. So in this particular account, I'm insured for $1 million. So what does that mean? If I drop dead tonight, my family gets $1 million tax-free. That doesn't wind up in probate court and has my mom and dad like fighting against each other to try to fight with the government. And then the government ended up taking a third, right, during the whole process of litigation and all that stuff. But here, $1 million tax-free transfer. This is life-changing money, right? I mean, my parents have been living in this country for 40-something years. They've never earned $1 million, right? Now, let's say I were to get a critical illness, knock on wood, right? The coverage amount is $900,000. Like, no, we're not doing a GoFundMe over here, right? And because we have this account, we can pick, choose, and refuse the care that we want, the specialists that we want, which facilities we want to go to, because this is not your health insurance saying you got to stay within network or they're not covering for certain things, right? And then, of course, at the bottom here is terminal. So what is terminal? Terminal says, hey, if the insurer is going to pass away in 12 months or less, well, again, you don't have to die. Now I get to spend this money while I'm alive because I may want to do whatever my last wishes are, right? And then over here, long-term care. Some of you may or may not know my brother Kevin, who's going to be 44. I was just talking to him. He's going to be 44 this coming Thursday. Well, he's in a nursing facility. Thank God. He's in a 5-star nursing facility here in Brooklyn, but that's long-term care. He's not an old person. He's young, right? He lost his leg about 5 years ago. He's young. So long-term care is, again, money that will pay out to you and I, God forbid, if something were to happen health-wise. So, guys, everybody needs this account because, yes, you're growing your money tax-free. Yes, you don't have to worry about paying taxes in the future. Yes, you're growing your money in an environment where you're never ever losing when the stock market go down, right? On top of it, you're leveraging the life insurance because if you get sick or when you get sick, you have money. And when the good Lord calls us home, right? What happens? Generational wealth, because we believe in generational wealth. Now, this bottom one here shows you my cash value, right? So if I wanted to, let's say, buy a house or do some kind of investment deal, or I don't know, do whatever, well, I have access to $94,140 in my policy, and I have 3, right? Now, if I had a 401k, I'm under 59 and a half. So good luck with me trying to access this 94,000. Number one, I would have incurred 10% penalty because I'm under the age of 59 and a half. Secondly, it would have caused a tax event because now I got to pay tax on that money. Over here, easy breezy. Easy breezy cover girl. No taxes, and I don't have to get any penalty. And I'm not telling you, or there's no conversation here. It's like, hello, I got 94,000. Wire transfer me back whatever I need. So guys, this is the power of having these strategies. And with the year coming to close, if you are a self-employed, or even if you're not self-employed, maybe you are an employee and you have, you know, a 401k IRA or something with your job, well, you heard it from the tax professional herself. Everybody should want to diversify their portfolio because, listen, nothing is getting cheaper in the future. Everything is going up, and so will taxes. So if you have $1 million in your 401k, that is good on one hand, but it's concerning on the other end because about 30 or 40% of that is going to go to Uncle Sam, who's going to love you, right? Who's going to love you. And in closing, I do want to share, if you do have kids, right? We love also protecting our kids with IULs. The minute they are born, you want to get them protected because, number one, hopefully they were born healthy and they're not diagnosed with anything, right? Everybody in my family, they call me. Anybody that gives birth, they call me. My great cousin just got her first grand, right? And we got him protected, right? Not even a year old, just a couple months. I think he was born in April, right? So when you set your kids up, number one, you're protecting their health, you're protecting their life, and you're also starting to build their future. So now when these kids are 18, 19, 20, 30, 40, 50, whatever, you've mapped out their entire life. You're not just only saving for college, but you're saving and setting them up for life. A lot of us, our community, we said just for college. We save just for college. But no, with an IUL, you can use the money for college. You can use the money for any and everything else. So we want to educate our community on setting our kids up for a lifetime and not just for college time, right? A lifetime and not just for college time. So we're going to have this webinar on Thursday. It's going to be at 7 p.m. Eastern and 10 p.m. And we're also going to have Spanish at 9 p.m. So take a screenshot, or the person who invited you, they're going to make sure that you get the information to come on this coming Thursday. Listen, this year, we're not giving no foolish gifts around here anymore. We are leveling up as a community, and we are giving smart gifts. We are giving gifts that are going to keep on giving, because you're going to buy that nice Nike or Jordan or clothing or toys or whatever. And when they're 18, where are those toys? They're no longer here, right? So yes, we have to spend money on those things because they're kids, but you don't want to spend too much money on those things. Let's give meaningful gifts, gifts that are going to keep giving. So now when they're 18, 20, 30, 40, this thing that you opened when they were little is going to keep giving in their later years as well. So everybody under the sound of my voice, if you have kids, niece, nephew, godkids, stepkids, adopted kids, grandkids, this year for Christmas, you want to make sure you get with one of us, licensed financial professional and educators, and let us run a plan for you that is within your budget, but most importantly, get these kids covered and get them
Yep.
stacking and saving in their IUL. Imara, you have IULs for your girls, right? Well, you
I
have
was
a boy
just
and a
gonna,
girl.
I have a boy and a girl, but just so that people understand, we also practice what we preach. I have an IUL personally, which my business does pay for. So that is my quote unquote savings and retirement there. And it's also my deduction for my business. And then my son is 4 and my daughter is 8, and they both have IULs. So when grandma, auntie, want to give a little Easter money and birthday money and things of that nature, I don't put it in a bank account for them. I put it in their IUL for them because it's going to earn interest. It's saving for them. It's saving for their future.
Wow. And you heard it from a IRS tax professional. Okay. And then the last thing I want to say is we have some powerful men of God on this Zoom. I want to acknowledge them. One of my classmate brother, Pastor, let me see if he's on. Yes. Let me see. Oh, he's on. Pastor Delroy Fredericks, who's also a client of mine. Thank you so much for jumping on. If you need to connect with Imara, just definitely let us know. We also have, I don't know, Pastor Delroy, are you able to share anything? If you want to share, I can give you a minute. And then we also have Pastor um let's see who's the other pastor we have on. Pastor Daryl Jones. Him and I did an amazing webinar last Sunday on faith and finance, and we're going to have another one this coming Sunday at 7 p.m. Pastor Daryl Jones, do you want to say anything?
No. Show up, share. This is powerful. This is life. This has changed my life in a matter of 1 year. A 6-figure earner, now thinking millionaire to multimillionaire rather than thousandaire and 100,000aire.
Woo! Coming from a man of God, okay? And then we also have, guys, you may or may not know, I'm really big in the education space. So different schools at different time of the year would call me to come back and speak. For the last week, I was in Los Cabos, so I couldn't, but I sent 2 of my teammates, and they connected with a really bright young man who actually was in the office today. We got to get him going. And I want to give Timothy a minute to share. Timothy, are you able to share?
Yes, can you hear me?
We sure can. Take it away.
Okay. Hi, good evening, everyone. My name is Timothy Francis. So, what I would like to share with you guys this evening is that I'm organizing an event for January 10th. It's a pop-up shop and also a networking event as well. So, if you are a business owner, entrepreneur, or someone considering to start a business, you can come through and show your support or maybe even register. So what what the event entails or is about is for you to speak about your business, your services, your products, and also have an opportunity to sell your products at the event afterwards. So I'm going to give the speaker, Sister Odetta, the link for registration, and you're free to register.
Are you
Thank you.
able to drop it in the Zoom chat? And is there a fee for entrepreneurs to promote at the pop-up?
Okay, so there are 2 fees for the entrepreneurs. So it's $35 for if you have services and products, and $20 for if you have just services. What it includes is a discount for if you have promotional media that you would like to be created for the event, an event t-shirt, a booth, and also a spot within the event's magazine.
Wow, wow, wow. Guys, I'm so incredibly proud of this young man. He just came from Guyana, barely 2 years, and he's only 22. He's doing amazing already in the country. He's in school for what is it, architecture. He has his graphic design business, and he's just out there hustling already, right? And he just came to this country 2 years. He's doing an amazing. He's on the right path, and we just want to support him and show some love. And it's all services that we need. So if you are in the New York area, the cost is very little to be promoting your business, where you get exposed to meet other people and mingle and network and promote your business. So we will definitely be there. And I wanted to make sure it's January 10th, right, Timothy? Huh?
Yes, January 10th.
Okay, awesome.
Yes, January 10th.
Awesome. So guys, let's support one of our own. If you have any graphic design business, or you have a business and you want to be at the pop-up, go ahead and drop the info if you can, your number for sure. If you can't get the link to right now, just at least put your phone number so people can contact you, or guys, you can reach out to me, right? So with that being said, thank you so very much, licensed partners. We will see you guys at 9 p.m. for our Base Shop training. Everyone else, please, 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 you know the drill. Get in touch with the person who invited you so we can have a one-on-one and help you with your taxes and your finances. We are a one-stop shop. We do it all from birth to burial. Thank you guys so much. And thanks again, Imara. You've been amazing.
You guys have a good night.
Hi there.